Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Senior Technical Analyst with Market Rebellion, and we're having another crazy week here as new news in the banking sector where Deutsche Bank looks like they're in trouble. Now, I'll talk a little bit more about this towards the end, but I'm starting this report off with a word of caution for those, especially who are along the markets right now. I think things are going to heat up in the coming months. And my message to you is to protect your downside, protect your profits while the markets are rallying in your favor. Again, if you're bullish. And if you are bearish and you're following along with some of the put spreads that we have on through my trade alert services, then you're going to be in for a good ride. I truly believe that the downside is where we need to stay and play and following the charts all the way. So let's take a look at the DIA. As we can see here, we have a bullish engulfing candle. Now, I'm still holding on to this downside target for the longer term, but I think because of that bullish engulfing candle, we could rally a little bit on Monday, but I think it's going to bump its head up against that moving average and come right back down. So I'm doing a two-part forecast on this one where I think the upside is 323.36 and then right back down to last week's target, which is about 7 cents higher. We had 314.90. We'll still keep that 314.90 on the way down. So that is my forecast for DIA. Now the IWM did hit my downside target here. You can see that last week the target was 168.77. We hit that, and while that's not a bullish engulfing candle, I think that we could still rally just a little bit. I'm going to do another two-part forecast where we'll rally Monday and Tuesday and then come right back down in this ABCD pattern. So upside target on IWM is 173.57 and then right back down to 166.45. Now let's take a look at the Qs. Ticker symbol QQQ, basically representing the tech sector. This is looking a lot different. We have a shooting star here, a doji here, and a hanging man right there. So that target is still in place at 296.66. Look at the oscillators and take out your trading checklist. The stochastic is about to cross with a sell signal. The CCI down here is already crossed with the sell signal, and we have a wide divergence from that moving average. So again, that trading checklist is coming in really handy. Stay tuned. At the very end, you'll have a link to find out where to get your hands on that trading checklist. It's basically 7 points to follow, and you'll see that it's very, very simple to follow along with the signals and mark off your trading checklist. Every one of our members has a copy of that. And so if you don't have a copy of our trading checklist, go right to Market Rebellion and you'll get the video on how to use that. And then you can get a copy of it as well. So that's for the Qs. Again, reiterating that downside target of 296.66. Now let's take a look at SPY. Right here, we have a pivot point with a bullish engulfing again. This is another two-parter. I think we're going to try to rally that on Monday and Tuesday. And I'm doing a longer-term target out into April. And I'll show you why I'm doing that when I get to the VIX. So upside target on the SPY at 397.90, and then a longer term target into April 10th right there at 382.89. So I'm going to erase that. Again, keeping it for the longer term, but looking at that bullish engulfing candle, you can't ignore that. All right, look at the oscillators, still turning down on the stochastic and starting to hinge up on the CCI. So we have a conflict there. We got to go with the candle and the volume. So we have a drop in volume on the way down with that bullish engulfing. Again, that's more bullish than bearish for the short term SPY. Now let's take a look at the VIX. The VIX is showing some interesting candles here because we have the hammer candle right here on Wednesday. We have more or less a elongated spinning top here yesterday and an inverted hammer right there, which is bullish for the VIX. Now, I did say that the SPY will rally Monday and Tuesday, but I think we're going to see another crazy market in the VIX, and I'm still going long-term on that to the upside of 29.21. Now, I want to point something out on the VIX that I have not seen in my career. If you look at the June options right here, look at the $30 strike price, and you're going to see a tremendous number of open interest contracts right there at 423,501. And when you think that's something, when you combine that with the open interest at the 40 strike, that's 415,000, a little bit more than 415,000. Now, if you've had a chance to look at my pin pressure paper, it's the white paper that I wrote for the MTA, you'll know that I've proven it's no longer a theory. Prices gravitate to the strike prices that have the highest open interest. And the reason I find that extremely interesting is because the 40 strike with 415,000 in open interest is pretty much where my long-term target for the VIX is, up here at 4188. And so I do believe that we're going to move up there, and I'm going to go out on a limb again and give you a forecast. I think that April, May, and into June, we're going to start to see the VIX really start to climb. And if you look at the timeline and what I've talked about in previous market reports, you'll know that I talked about the Fed trying to launch their digital currency and the accounts that will come out, or they're trying to launch those in July. And I think that we're going to see a big shakeup before that. I think that the banking sector and the problem that we're seeing in the banking sector is not over. And with that, you can see that Morgan Stanley's top strategist here is telling us that we could see the start of a vicious end to the bear market in the U.S. stocks. Now, those bulls are not going to hear the vicious end. They're only going to hear, oh, we're marking a possible end to the bear market. That's not what he's saying. I believe that we're still going to see capitulation. That could take months to occur, where investors capitulate. And I think we're starting to see not necessarily a capitulation, but we're seeing a move into the 2-year treasuries by investors who are more or less getting frustrated with the volatility. And they're saying, you know what? I think we're going to move to the sidelines here and take a break for a while. And if you think there's an end to this banking crisis, then again, look again right here. The current deposits are 18 trillion, but the insurance fund is only covering 125 billion. This doesn't make any sense to me why people would think that this is an end to the banking crisis. This could be the very beginning of the tip of the iceberg. I believe the Fed is walking a tightrope here in a hurricane, and they're trying to talk out of both sides of the mouth. We're being lied to, folks. Let's face it. And I know that there's going to be a lot of people that disagree with me, but I have to tell you, I stand up for what I believe in, and that is the truth. I announce the truth whenever I see it. And from what I can see, we are being lied to. Right here, this was just yesterday, we had Mark Zandi, who is Moody's chief economist, talking, and this is what he actually said. He said, we need a little luck here. And if you go back to the Yahoo Finance video and look at that interview, he actually said those words. Now, when you have top analysts and economists saying that we need luck, well, luck is not a strategy. That's like hope, right? Luck and hope look like cousins to me. And when you have people like this going on the airways and saying, yeah, we need a little luck here to get out of this problem, then that's a bigger problem than anyone's even talking about. And what do I say when we're being lied to? Well, here it is. Remember, back in June, Yellen said, it's transitory, right? The inflation is transitory. Well, she was wrong, obviously. Then Kamala Harris is going out there saying that we have a secure border. Well, that's absolutely wrong. And why is that even being discussed here in this market report? Because it does affect our economy. As people come over the border, our social systems are supporting them. It's draining American taxpayers, and taxpayers are already stretched with inflation. Still no end to inflation, by the way. And we're continually being lied to because we're being told these stories to help support the market. Look at John Kirby talked about how the U.S. had nothing to do with the sabotaged Nord Stream pipeline. Well, that was wrong. That evidence is coming out to be absolutely false here, and we did have a lot to do with that Nord Stream pipeline and the rupture in that. And then you look down below, and we have the Fed signaling this week that they're nearing the end of their rate hikes. Really? You believe that? Well, anyone that's taken a simple college course in economics knows that in order to get ahead of inflation, you have to raise the Fed fund rates to a level that's higher than the inflation rate, and we're still not there. So if the Fed decides to end the hikes in the interest rates, then we're basically opening up the door to inflation and allowing it to run wild. And that's what I believe is going to happen. This inflation could run 5, 7, maybe 10 years. And I'm not exaggerating when I say that. And people are, again, not even prepared for that. So I think the worst is yet to come, but that is the best for us as option traders. One very interesting point here. Remember, I talk about the war. I look at the military and what's happening. This I find very curious because the UK is sending depleted uranium shells to Ukraine, which basically is tantamount to using a dirty bomb. Now, this obviously isn't a picture of a U.S. soldier handling with bare hands. That's not radioactive. That's just a doctored photo right there. However, this is a serious story, and you got to look into that because one side of the equation we're hearing, maybe China's going to get involved with the peace talks, and then on the other side, we got the UK sending depleted uranium shells to Ukraine. Doesn't make sense. Well, let me just say this before we wrap up. If you look at the VIX, again, I think we could pull back a little bit next week, but my ultimate target is up there at 29.21. Well, one other thing I want to add is that in Market Rebellion, I'm going to be introducing a form of charting that I used when I first came onto the trading floor, and that is point and figure charting. It was developed in the U.S. in the 1870s, and later on, candle charts were brought to the U.S. from Japan. And so I started using these and putting X's and O's on my charts by hand because we didn't have computers. And so I'm going to be talking a lot about this with our members and teaching them how to use point and figure charts in conjunction with candle charts. Now I'm talking about silver now. Silver recently filled a gap today, in fact, filled this upside gap at 2154, and the oscillators are starting to roll lower. Now, I am out of 15% of my position, and I'm looking to buy it back lower. I make that very public. Whenever I make the trade, I tell people, I even tell them where I'm going to be buying it. You want to buy ahead of it, that's totally fine with me. But I have an order in to buy it at 1915. Now, if it gets down to that moving average and bounces, I will be raising my buy limit up to the moving average to get back in at the lower level. So I parlay silver. Now, on the point and figure chart, you can see that there's a resistance level up here around 22. And there's a trend that you could see down if you're drawing angles on this. So silver is up against resistance on the point and figure chart. Right around 19 and a half, it's even marked here as where the O's are going to start showing up. When O's start showing up on a point and figure chart, it means that there's a pivot point and the sellers are moving in. And again, I'm going to be talking a lot about these charts with our members at Market Rebellion. So if you're interested in learning more about charting in general, how to trade using our strategies and spreads and trading options. And again, if you want to learn more about candle charts and point and figure charts, just call Market Rebellion, make an appointment with them, and plug in. So with that, I'd like to wish you a very happy weekend. Stay in touch with my midweek market report, which comes out on Wednesdays right after the close. We go live. If you can't make it live, then go to Market Rebellion and you'll see the link on how to get to the recording. But we're in very treacherous times right now. As I mentioned, the banking sector is still in trouble. Don't believe anything that we're over the hump on that. I think it's just the tip of the iceberg. And if you're careful and you're following the charts, you can do very well, especially on the downside. Again, the caution goes out to those bulls who feel that they want to stay long. I'd say just protect your downside, keep your eye on the charts, and manage that risk accordingly. So have a good weekend, and we'll talk to you next time. So long. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol, using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte, and this is my 7-point trading checklist.